Hello, friends. Your check could be at risk. Not because you did anything wrong. Not because the system made a dramatic error that someone flagged and corrected before it reached your account. Because the Social Security Administration just revealed 3 critical changes that are already moving through the processing system right now. And for a significant number of retirees, the combination of not knowing these changes exist and not taking the specific action each one requires is going to show up as a smaller deposit, an unexpected deduction, or a missed correction that keeps running at the wrong number for months before anyone catches it. 3 changes, each one serious on its own. Together, they create a situation where the retirees most affected are the ones least likely to have been told about any of them. I have gone through exactly what SSA revealed, which categories of retirees sit inside each change, what the real dollar exposure looks like when these changes land in an account that was not prepared for them, and what the specific protective action is for each one, the thing you do right now that determines whether this change affects you in a way you can manage or in a way you absorb without understanding what happened. Stay until the very end. The 3rd change SSA revealed is the one with the largest risk exposure for the largest number of retirees, and it is the one SSA buried deepest inside their communication. And if SSA Now is where you come to find out what SSA revealed before it puts your check at risk, subscribe right now and turn on the bell. 3 critical changes are already in motion. The people subscribed here know what is coming and what to do about it. Everyone else finds out when the deposit already changed. Let me start with what SSA revealed and why all 3 changes matter simultaneously. The Social Security Administration confirmed 3 specific adjustments to how benefits are calculated, deducted, and in some cases,
recovered across the current retiree population. These confirmations came through updated processing guidance, not through personal letters to affected beneficiaries, not through announcements designed to reach seniors in plain language, not through any mechanism that resembles direct communication to the people whose financial lives these changes touch. They came through the system. The system is running, and the risk to your check is real, depending on which of the 3 changes applies to your specific situation. Here is what SSA revealed. The first critical change, an update to how earnings test withholding is calculated and communicated for retirees who are collecting Social Security before full retirement age and still working. This change is creating the most immediate check risk for the seniors it affects, and it is affecting them in a way that feels, from the outside, like their Social Security payment simply disappeared without explanation. Here is the rule. If you are collecting Social Security before your full retirement age and you are still earning income from work, the earnings test applies. In 2026, if you earn more than $23,400 in the year, SSA withholds $1 for every $2 you earn above that threshold. If you will reach full retirement age at some point this year, the threshold is higher, $62,160, and the withholding rate is more forgiving at $1 for every $3 over the limit. What SSA's critical change updated is how mid-year earnings projections are handled when a retiree's income pattern suggests they will cross the threshold before year-end. Under the previous framework, SSA primarily made earnings test adjustments after the fact, based on reported annual earnings once the year closed. Under the updated framework, SSA is now applying projected earnings adjustments mid-year for accounts where incoming earnings data suggests the annual threshold will be crossed. What that means for retirees who are working and collecting, your check could be
withheld or reduced before you cross the threshold based on SSA's projection that you will cross it. If your actual earnings end up below the threshold because your work slowed down, you took fewer hours, or your income pattern changed, you are entitled to a credit for amounts withheld on an incorrect projection. But that credit does not arrive automatically. You have to contact SSA and report the corrected earnings picture. If your check has reduced or disappeared recently and you are working while collecting before full retirement age, the updated earnings test projection framework may be the reason. Call SSA at 1-800-772-1213 and ask specifically whether a mid-year earnings projection adjustment has been applied to your account. If it has, and if your actual year-to-date earnings are lower than the projection SSA used, report your current earning status and request a recalculation of the projected withholding amount. The money is not gone forever. Earnings test withholding gets credited back once you reach full retirement age and increases your ongoing monthly benefit permanently. But if the withholding is based on a projection that overestimates your earnings, the credit you eventually receive will also be overstated, creating a reconciliation complexity that is significantly easier to address now than after the year closes. Second critical change SSA revealed, a revised approach to how overpayment determinations are being made for retirees whose living or income situation changed during the pandemic years and whose benefit adjustments from that period are now being reviewed. This is the change generating the most anxiety among retirees who received benefit adjustments during 2020 through 2022 and have not yet received any communication from SSA about how those adjustments are being treated in the current review cycle. Here is what happened. During the pandemic period, SSA made a series of benefit adjustments, temporary income exemptions, and
procedural modifications that affected how certain types of income and living changes were reported and processed. Some of these modifications resulted in benefit payments that SSA is now determining, 3 and 4 years later, exceeded what the recipient was entitled to under standard rules. SSA's critical change is the formalization of the review process for these pandemic-era cases, and the acceleration of the timeline for moving accounts from review status to active overpayment determination. What that means for retirees who received any kind of benefit modification or enhanced payment during 2020 through 2022 is that an overpayment notice may be approaching, and the 60-day response window on that notice will begin running from the date it is issued, regardless of how unexpected its arrival feels. The protective action here is not passive. If you received any benefit adjustment during the pandemic period and have not yet received an overpayment notice, contact SSA now and ask whether your account is currently under earnings or benefit review for the 2020 through 2022 period. If it is, ask what the timeline for determination looks like and what documentation SSA has on file for the adjustments that were made. Being aware that a notice is coming gives you time to gather documentation, understand your options, and prepare your response before the 60-day window starts running under time pressure. If a notice does arrive, your 3 options remain consistent with what the law provides. A formal appeal if you believe the overpayment determination is incorrect, Form SSA 632 for a waiver request if repayment would create genuine financial hardship, or if the adjustment during that period was not your fault, and a negotiated repayment rate if you acknowledge a balance exists, but the default recovery amount being applied to your monthly check is not sustainable given your current fixed income. None of these options appears prominently on the notice itself. All 3 require you to initiate them. The time to learn they exist is before the notice arrives, which for retirees with pandemic-era adjustments on their account is right now. Drop a comment right now and tell me, did you receive any kind of benefit adjustment or modified payment from SSA during 2020, 2021, or 2022? Because I want to understand how many people watching this are potentially sitting inside the review cycle SSA just accelerated. Third critical change SSA revealed, and this is the one with the largest risk to the largest number of retirees, a fundamental update to how SSA handles benefit amount verification requests and what triggers an automatic internal audit of a retiree's benefit calculation. This is the change SSA buried deepest, and it is the one that creates both the largest risk and the largest opportunity simultaneously, depending entirely on whether the retiree understands what it means and acts on that understanding before the audit cycle runs without their input. Here is what SSA changed. The agency has updated its internal framework for what triggers an automatic audit of a retiree's benefit calculation. The review process that looks at whether the benefit currently being paid accurately reflects the correct application of SSA's formula to the retiree's actual verified earnings record. Under the previous framework, these audits were triggered primarily by specific flags: a reported earnings change, a formal reconsideration request, a survivor benefit election, or an overpayment determination. They were reactive, initiated by a specific event, rather than running proactively across the retiree population. Under the updated framework, SSA has introduced a proactive audit trigger for accounts that meet certain profile criteria, specifically accounts where the benefit amount has not been reviewed or adjusted in more than 36 months, and where the retiree's earnings record contains years from the manual processing era before 1980. These accounts are now being queued for systematic review under the updated audit framework. Here is why this is simultaneously a risk and an opportunity. The risk is straightforward. An audit that runs without the retiree's awareness or input may surface discrepancies that SSA interprets in ways that do not favor the retiree, particularly around earnings record years where the underlying data is incomplete, or where SSA's records differ from what the retiree actually earned. An audit finding that the retiree cannot respond to because they did not know it was happening can produce a benefit adjustment, downward, that the retiree has no context to challenge. The opportunity is equally direct.
An audit that a retiree is aware of and that they engage with proactively by verifying their earnings record, correcting any discrepancies before the audit reviews them, and requesting that SSA use the most favorable, accurate interpretation of their earnings history is an audit that is far more likely to result in a benefit that accurately reflects what the retiree is actually entitled to. In some cases, that accurate benefit is higher than what they have been receiving. The protective action for this change is the most important action any retiree can take based on everything SSA revealed today. Log in to SSA.gov right now. Open your full earnings record. Go through every year, not just the recent ones, every year, including the decades before 1980. Compare what SSA shows against whatever records you have for those periods. Identify any year where the figure is lower than your actual earnings, any year that is missing entirely, any period of work that does not appear in the record. For every discrepancy you find, file a correction request with supporting documentation before the automated audit reaches your account. An earnings record that has been corrected and verified before an audit runs produces an audit result that reflects accurate data. An earnings record that
contains errors when the audit runs produces an audit result based on those errors, and correcting them after the fact is significantly more complicated than correcting them before. Call SSA after logging in and ask specifically whether your account has been queued for the proactive audit cycle under the updated framework, the cycle targeting accounts with manual era earnings records that have not been reviewed in more than 36 months. If your account is in that queue, ask for the timeline and ask what you can submit proactively to ensure the audit has access to the most accurate and most complete version of your earnings history before the review runs. This is the action that determines which side of the risk and opportunity equation you land on. SSA revealed the change. The audit cycle is running. The question is whether your account is ready for it or whether it goes into review carrying errors that have been quietly costing you for years and are about to be examined by a system that was not designed to find them in your favor. Here is the thread connecting all three critical changes SSA revealed. The earnings test projection update creates a risk of withholding based on income you may not actually earn, a risk that requires proactive contact with SSA to correct if it materializes. The pandemic-era benefit review acceleration creates a risk of overpayment notices arriving for adjustments made years ago, a risk that requires awareness of your options before the 60-day window starts. And the proactive audit trigger update creates both a risk and an opportunity, depending entirely on whether your earnings record is accurate and verified before the automated review runs. In every case, the risk is larger for the retiree who does not know about the change than for the one who does. In every case, the protective action is available right now and costs nothing to take. And in every case, SSA revealed the change without revealing what it means for the person whose
check that is at risk. That is the gap SSA now closes every single time. So here is what to do right now. If you are working and collecting before full retirement age, call SSA today and ask whether a mid-year earnings projection adjustment has been applied to your account. If you received any benefit modification during 2020 through 2022, call SSA and ask whether your account is currently under review for that period. And log into SSA.gov today, right now, before this video ends, and open your full earnings record going back to the earliest year you worked. Verify every year. File corrections for every discrepancy. And call SSA to ask whether your account is in the proactive audit queue under the updated framework. 3 critical changes. 3 protective actions. The check that is at risk today does not have to be at risk tomorrow. If SSA now gave you the information today that protects your check from changes SSA revealed without explaining, subscribe to this channel and turn on the bell. Every critical change, every hidden risk, every update that puts your retirement income in jeopardy without announcing itself, I find it, I trace it, and I bring it here before it reaches your deposit without warning. And share this video with every retiree you know right now. Their check is at risk from these same 3 changes. Whether they find out today or after the damage is done is a difference this video can make.